Yo guys, welcome back to my channel, and in today's video I'll be covering what's coming up for the CCR New Launch Market and also a little bit on what has happened so far in the CCR region in 2025, because I think it's going to be quite interesting seeing like the rebound in the CCR demand compared to when the foreigner ABSE was first introduced. So stay tuned if you want to find out more. For those of you that's not too familiar with Singapore's landscape, over here I have the entire Singapore map, and in today's video we'll be touching on the core central region, also known as CCR, and these are demarcated in the ones yellow color. So there are District 6, 1, 2, 9, 10 and 11. Now let's start things off with what has happened so far in the 2025 CCR New Launch Market. So to start things off, we have over here is Aurea at Golden Mile area there. So they sold 23 units upon the launch at an average price of 3005 PSF. So this was in March 2025. Next up we have the Robertson Opus. So they sold 41% upon launch at an average PSF of 3360. And then next up we have Upper House at Orchard Boulevard. So they sold 54% of the units on launch day, average PSF of 3350 PSF. So next up we have W Residences at Marina View. So this one they started the public launch in October, starting with 100 units from 3230 PSF. But this one I can't remember exactly how many units were sold, but there was quite a few units that was actually sold on the public launch day. And then we have Sky at Holland. I think this one most people already have heard of it. 99% sold on day 1, and the average PSF is 2953 PSF. This is at the Holland Village area. And next up we also have 21 Anderson. So this one is the ultra luxe kind of development, and then the most expensive unit there was actually sold for 52.25 million. And then last but not least, in the CCR region we have River Green, which sold an impressive 88% on launch weekend at an average price of 3130 PSF. Overall, when I take a look at all the 2025 CCR launches, right, I can safely say that the demand has rebounded, especially from the local demand, because when I take a look at all these take-up rates and the PSF that is transacted, I would say they are quite strong and the PSF is quite high. It's definitely CCR price. I think some of the contributing factors could be because maybe the RCR and OCR prices has been bridging quite close already. So as a result, most Singaporeans, maybe they feel like, hey, I top up a little bit more, I can get a more prime district, might as well I do it, you know. So I think I do get some of that sensing on the ground right now, because if you have watched my previous video in the RCR and OCR regions, some of the resale and new launch properties are definitely not cheap anymore, and some of them in the RCR region also cross $3,000 PSF. So don't be surprised like why Singaporeans will actually top up a little bit more just to get a more prime location. Another interesting trend that I observed so far in the recent 2025 CCR launches, right, was that, let's say we talk about Upper House at Orchard Boulevard and even Sky at Holland, River Green, all the bigger bedroom types, right, the 4 and 5 beders, the take-up rate was super strong, and I would say the take-up rate, right, I think is even stronger than maybe some of the smaller bedroom type, like the 2-bedder or the smaller 3-bed. At least this is what I observed in the most recent launches, because like for example, from what I remember, Sky Holland and River Green, right, their take-up rate for the bigger bedroom types was very strong. And we don't even talk about the CCR region, even the RCR and the OCR region, I also do see a similar trend, which the bigger bedroom types also have very strong take-up rate. So recently another CCR GLS also concluded. So over here you can see this is considered the Bukit Timah GLS CCR, and this is right beside Newton MRT, okay? So this one, the title reads HH Investment tops 8 bids for Bukit Timah Road GLS site at 1820 PSF PPR. So this is definitely quite crazy, and we have a total of 8 bidders. So I would say this is overall quite an aggressive behavior from developers as well. And this was awarded just this month, 11th of November. Right now, let's take a closer look right into the bidders for this Bukit Timah Road GLS. Over here you can see first bidder HH Investment. The PSF PPR was at 1820. So when we look at the number 2, which is Hoi Hub Realty and Sunway Developments, they also bidded for this plot, but they came in at 1621 PSF PPR. So between the first one and the second one, we are looking at almost 200 PSF PPR gap. So I would say that's quite significant in terms of land pricing, because when you translate it to the actual PSF, right, maybe you just times 2, it's almost like a 300-400 PSF in terms of their launch price. So I would say it's quite a significant price gap. Whereas you can see from number 2 to number 3 onwards, their gap is quite constant, looking at like 60 plus PSF, and then let's say to capital land development, all this towards the China overseas land, right, they also come out with 70 plus PSF PPR gap. Hong Realty and Hong Leong Holdings to All Green, we're also looking at a 30 plus PSF PPR gap. The gaps relatively should be around this range to make sure like you don't really overpay for the piece of land. But for HH investment, maybe they have a different overview and vision for this particular plot, since maybe because it's right beside Newton MRT, but their land bid price of 1820 PSF PPR certainly shows a lot of confidence in this area and also Singapore's market. So right now we have already gone through what has happened so far in 2025 in the CCR New Launch market. Now let's take a closer look right at what is going to happen in the 2026 CCR New Launch market. Starting off for the 2026 CCR New Launches, we have is Newport Residences. So this one we should be expecting preview in January, and this is by CDL lah. Okay, so this is the redevelopment of the Fuji's Xerox Towers. We don't really have the pricing and the break-even for this development because it was a redevelopment, and for CDL, right, they actually chose to delay the launch of this development for quite a few years already, because I think the show flat was already ready for a while, but they just chose to not launch it, I think because of all the ABSD, and I think it wasn't that worth it at that time because maybe the market hasn't caught up yet. Over here you can see the latest updates on Newport Residences. Preview we should be expecting on 16th of January to 27th of January. So for those of you that is interested in this development, you can feel free to let me know because this is also a freehold development. And this one, the booking will be on 30th and 31st of January 2026. And for the agents, we will have a virtual briefing on the 5th of November. And you can see the description. We have a rare freehold in the CCR region and also 3 minutes towards Prince Edward MRT. So this one is quite interesting because it's a residential development with service apartments and also office and retail component. So for this Newport Residences, I'll do a full review on it. Stay tuned for that. But for now, I'm just going to cover the surface of it. Just to add a little bit of my thoughts, right, in the area for Newport Residences, I think for most of you that is in the new launch market, especially in the CCR region, you have heard of One Burnham. So over here you can see back then One Burnham during Chinese New Year, they had a mega promotion. Okay, so this is also known as a fire sale by the developers. So for One Burnham, right, they actually had a CNY mega promotion, savings up to 830k and starting from 2004 PSF. So do bear in mind that this is non-harmonized PSF. If you adjust already, right, maybe you are looking at 2005 PSF onwards. When you take a look, right, if this kind of CCR area, 2005 PSF for a newly TOP project, it doesn't make sense or not. So I think at that time, maybe people when they entered this development at the fire sale, it does make sense. But for those of you that entered at the very start, you can go and take a look what was the price gap difference. Okay, I won't mention too much here. And there's a mega promotion going on, and then you can see, right, the prices are 1 bedroom from 1.295 million, 2 bedders from 1.735 million, 2 plus study from 1.955 million, 3 bedroom from 3.496 million. So definitely I think when we look at the current new launch pricing now, it does seem like these 2 bedders are quite reasonable, because if you take a look, right, this One Burnham 2 bedders, let's say I take these 2 bedders for example at 1.735 million quantum, when you go and think about what has already been transacted at, let's say at Penrith, there are 2 bedders. I think Penrith 2 bedders even hit 1.9 million range if I'm not wrong. When we take a look, right, compare rental yield lah, let's say rental yield, I would say this one definitely is a much better rental yield and compared to Penrith lah. And also when we look at the pricing that they have over here for the 2 bedders, it does seem like this makes a lot of sense even if it is in the CCR region, because for an RCR project, if the buyers already can accept 1.9 million range for this 2 bed 2 bath quantum, right, then I think this kind of quantum for a 2 bedder at the CCR region does make a lot of sense already. And you can see over here, these are the transactions that was done back in January this year. And then for example, this is the 3 bedders. You can see the PSF that they transacted, right? You even have the lowest at 2,318 PSF. So even if you adjust for harmonization, definitely this PSF is very, very attractive. I don't want to talk too much about what was the other neighbors that they bought lah. Definitely those, you can go and check out the caveat. I won't be touching too much on that, but overall you can see for the people that got into this pricing, and then we compare to the recent new launches that PSF, right, I really think they got a very good deal. And on top of that, right, this will kind of form the basis of what we should expect for Newport Residences, because when I see the prices here, I would say Newport, unless they so-called position themselves as a very different product to one Burnham, other than the freehold status, then I don't think they can command so much higher. You get what I mean? Because here, if the transaction just done this year at 2025, 2003 PSF for a newly TOP project, right? Then I think CDL has to price it carefully, because if they price it too big of a disparity, maybe even at $3,000+ per square feet, and then you got a neighboring plot transacting at 2004, 2003 PSF range, you can already see the price gap over here. Next up, we have over here is the River Valley Green Parcel B. So this is also known as River Modern. Okay, preview is expected to start in February next year. Okay, so this is residential block with a first story commercial component, and this highest bid actually is at 1420 PSF PPR, and the total number of bids is 5. So you really can see a very big difference, right? For this River Valley plot, which is bidded by Guaco Land at 1420 PSF PPR, and then you compare to just now, like I mentioned, the Bukit Timah Road GLS was at 1008 plus. So this one already have a price gap of about $400 PSF PPR based on the land. And if you times 2, or maybe conservative, a bit lesser than times 2, right? Based on the launch PSF, we should be expecting a gap of about $600-700 PSF. When I look at location wise, to me, I do think this River Valley plot makes a lot more sense as compared to the Newton plot. Maybe people will have different opinions on this, maybe you can let me know. But overall, I think this plot won't lose to what we actually see at the Bukit Timah Road one. But that one will be in the 2027 supply. So do take note, this one is already the 2026 supply. And we are already seeing a very big gap for 2026 versus what has happened for 2025. But no choice, because 2025 one, like let's say River Green, Zion Grand, all these, Promenade Peak, whatever cheaper units already has been taken up. So this is what we are left with in terms of remaining inventory and also what's coming up next year. For River Modern, right, you see the break even is about 2005, 2006 range. And if we add about 20% profit margin range, we should be looking at maybe 31, 32 PSF range. And we all know Guaco Land, usually they want to position themselves as more premium. I think what they did with, let's say, Avenue, all this was a very solid product. I do expect this one shouldn't be cheaper than River Green, because River Green PSF also done very well, and so very strong percentage in terms of launch day. So I would do expect this one, there may be a little bit of a premium positioning in terms of the layout and also type of people that they want to attract. Okay, so this is a little bit more information about River Modern. So this is by Guaco Land, Prime District, CCR River Valley. And project highlights, we have direct MRT access to Great World MRT. Top school is right beside River Valley Primary School, and also it's going to be having the Singapore River views. I think this was one of the more unique selling points versus, let's say, River Green, because River Green, they don't really have that unblocked view of the Singapore River. So stay tuned for River Modern. Definitely it will be the slightly more premium in terms of facing, and also convenient lifestyle is connected to shopping, dining and entertainment options. So this one, like I mentioned just now, residential and commercial at first story, estimated number of units 455, and then we have 2 blocks up to 36 stories. So if we compare to, let's say, Promenade Peak and Zion Grand, it definitely loses out in terms of the height and prestige of the development, because overall I just feel if the development is higher, like the 60 plus floor of what we see at Promenade Peak and Zion Grand, it really does feel more grand. But overall here, I think it's still a very grand development. Unit mix from 2 bedders all the way to the large 4 bedrooms with private lift, modern luxury design, and developer is Guaco Land. Targeted preview is on the 20th of February next year, and the launch should be on the 7th of March. So this one is what I heard from the owner that I met at Avenir, they already sent out the 4-bedroom layouts to them already. I think because Avenir is a very well done product, and the feedback that I had from the owners there was that they really love the development, and overall it's just a very nice and premium feel to the area, and it really does fit the target audience there. I already seen the layout that potentially they will launch for this River Modern. Of course, they say it's subject to confirmation now. So for those of you that want to take a look at this layout, you can feel free to WhatsApp me at 84849302 because this is what the owner sent me at Avenir. Maybe I can share with you, but I don't want to really share it online because it's not confirmed yet. So overall, if really Guaco Land they managed to deliver another Avenir type product from River Modern, right, I definitely think it's gonna be selling very well even in the resale market, because even for Avenir, its high price tag, right, you can see based on the asking price and also the profit margins, it's still quite strong. Of course, ROI percentage wise is definitely going to lose to some of the more OCR, RCR projects, but it's still a highly profitable CCR development. Over here, I also have the prices transacted at River Green. This one you can see the highest PSF transacted was for the 3 bedrooms at 3491 PSF. Don't be surprised like if let's say the other 3 bedrooms at River Modern, they also have this kind of PSF, and this is already done at the 30 plus floor. So regardless of the pricing at River Modern, you need to take note that this is already done here, and I would say this kind of forms a safety net, right, for the buyers looking at River Modern, because in the end, if already 3004, 3000, almost 3005 is accepted in this area, right, I think Guaco Land, they definitely have a lot of confidence to launch the pricing for River Modern close to even River Green's price. So don't be surprised if they actually choose to put it as a more premium product. Also, you must look at the land price. I do expect River Modern high floors maybe even hit 3006, 3007 PSF. Next up we have is this Dunearn Road GLS. So this one, right, you can see the highest bid was at 1410 PSF PPR, and look at the number of bidders. We have 9 developers bidding for this piece of land, and definitely this is very aggressive behavior. So this one, break-even, we estimate is about 2558 PSF PPR. So this one very similar to what we see at River Modern. Developers are Fraser's Properties, Secretary House, and CSC Land. So next up we have is Holland Link. So this one also done PSF PPR to the highest bidder, 1432 PSF PPR, and then the number of bidders also we are looking at 5 developers. So break even PSF PPR we're looking at 2587. Developers are similar. So when you look at all these Dunearn Road GLS, Holland Link GLS, and also this River Modern plot, right, overall, if you ask my opinion, right, seeing how similar they are in terms of the PSF PPR, I do expect their launch price to be quite similar as well. And if judging by all the land plot price and also how much potentially they are launching at, I do think out of these plots, definitely River Modern would be my top choice if they are launching all at the same price. But of course, if Guaco Land choose to price it a bit more premium, then you have to weigh your options. But overall, I think River Modern is a good size at 400 plus units. I think these 2 plots are slightly smaller. And also last but not least, we have this Bukit Timah Road GLS that I mentioned just now. So the highest bidder is at 1820 PSF PPR. Number of bidders we have is 8, and the estimated break even for this plot we are looking at is 3113. So if you think about it, to actually sell in a profit margin of about 20% for the developers, this one minimally, right, we should be looking at maybe 3005, 3006 onwards. But this should form the 2027 supply. So you already can see, right, even for the CCR land, we have quite limited plots for next year, and there isn't much choices. You can see there's only 3 plots, which is the Real Valley one, the Holland Link one, and also the Dunearn Road one. And now we got this Newton plot, Bukit Timah Road plot, and the price gap is going to be so significant to what we see in 2026. So for those of you that's still looking at the CCR region, I would say this Bukit Timah Road plot, it kind of cemented the new ceiling again in the CCR region. And yeah, I think for those of you, this might be back to the original price gap between the CCR land plots versus the RCR land plots. I think for now, we are seeing the prices being very close for the RCR and the CCR region. But for 2027 onwards, right, I do think the gap is going to be widened a lot more, especially with this aggressive bid from HH Investment. Alright, so now we already have gone through what has happened so far in 2025 and also what's coming out in 2026. I think it's quite important to take a closer look, right, at the numbers in terms of demand and supply for the CCR region. Okay, so over here here we have the entire new launch supply that's available for the whole Singapore. So we have 83 projects at 4620 units available. And then OCR region, we got 22 projects, 1104 units available. RCR, we have 31 projects at 2341 units available. And last but not least, we have the CCR, which is 30 projects available and 1175 units still available. Now, together with the remaining stock in the market, right, you can see over here I have labeled, right, for Dunearn Road, we have a total of 380 units, Holland 233 units, River Modern 455 units, Newport Residences 246 units. So together with all these supply for 2026 and what we have in today's market that is remaining, right, total supply for next year we are looking at is 2489 units. So this one is purely on the supply side. For the CCR region, we will have this total number. So now that we already know what is the supply coming out for next year for the CCR region, let's take a closer look, right, at the historical CCR new launch take-up rate. Okay, you can see over here I have the data from 2022 all the way to 2025. The APSD year was in 2023 . That's why you can see for the CCR new launch take-up rate, you could see like a very drastic drop, especially in 2024 of only 377 units. But overall, if I average across these last 3-4 years, right, we are looking at average per year of about 1,300 units take-up rate. If you just now we have the number 2489, right, we minus about 1,003 per year, the number will end up with about 1189 units remaining by the end of 2026 in the CCR market. This really means like the demand does match up with what we have for the upcoming supply. And I will still say this means in the market, right, I don't see a very big shift for the new launch or for the resale market. I think the main difference here would be maybe in terms of the pricing. If the CCR price gap for the new launch is too big from the resale one, right, then I would see some of the buyers navigating back towards the resale market in the CCR region. But disclaimer, if the demand, right, is similar to the 2025 take-up rate in the CCR market, definitely the inventory in the CCR new launch at the end of 2026 will drop and it will cause a stronger push in the resale market in the area. This year is at 1,008 plus, so it's already 500 more units as compared to the historical average here. And I would say this definitely with the combination of closer price gap for the RCR region versus CCR region, I do see a revival in terms of CCR demand without the foreigners. And at the same time, with the lowering interest rate, all this, I do see the buyers becoming more and more bigger proportion for the local side. So for those people that still believe that the CCR is majority dominated by the foreigners, I think today's market, especially from the recent new launches, right, it tells a very different story already. Majority of them are local Singaporean buyers. Let's take a closer look, right, at the resale demand for the CCR region. So here you can see I already compiled, right, basically for the recent new launch average is about 1,003 per year. Recent resale average, which is the pink color bar, about 2,001 per year. So this results in the number of CCR buyers per year. Average is about 3,004. So you can see even in the 2024 time frame when the ABSD was hit very hard, right, especially for the foreigners, you do see a big drop in the new launch CCR side. But as a result, this caused the CCR resale market to absorb more of the buyers. That's why you can see 2024 actually a lot more CCR buyers, especially in the resale market. We have record high of about 2,003 plus CCR resale transactions. And then you can see now looking at 2025, already so far we have about 3,900 CCR buyers. So definitely I'm quite confident to say that the demand, even for the new launch or resale in the CCR region, has already rebounded already. Assuming the average CCR buyers per year is at 3,004, the number of new launch buyers, maybe we say is still about 1,003, right? Then there will be no change in the 2026 new launch inventory as compared to 2025. And if we follow the historical trend, which is about 1,003 new launch units taken up per year, then the CCR developers will actually need to follow the 2025 pricing strategy that was done by the past developers for high take-up rate. So I would say if they price it aggressively, right, then they might suffer poorer take-up rates, okay? CCR resale owners also can expect gains if the OCR and RCR new launch pricing gets too near to the CCR pricing again. Because I think in my previous video I did say that the RCR developers should have some pricing monopoly for the new launches coming up. So if they price like let's say Thomsonville too high, etc., the buyers might actually choose to relocate to a CCR Resale instead. Because I mean, in the end, if you are paying almost 3,000 plus PSF, might as well you go to CCR already, right? So of course, for different bedroom types, even in the same district, they will definitely have varying performances. So for those of you that want a more detailed analysis to each bedroom type, you can feel free to WhatsApp me at 8484-9302. Looking forward to hear from you guys. Okay, so right now I want to touch on the upcoming supply. So this one very likely is going to be spilling into 2027 already. The only block we have in the CCR region over here, this is at Dunearn Road area, which is near 6th Avenue MRT, and it's also at the Turf Club, that area lah. Okay, so this one, the bid should be open at December 2025. Over here, I also have shown you on the map. You can see this is at the old Bukit Timah field there. They are going to be redeveloping this entire land for all these new GLS. Next up, I'm going to be doing a River Valley resale case study. So I think this is quite interesting because for those of you that has been following the River Valley launches for a while, you do know that there has been a lot of plots that is launched for sale. So you kind of want to see what was the impact of all these GLS land bids, right, on the resale prices in the River Valley area. Okay, so right now I want to touch on River Green. Let's wind back the clock, right, to when River Green was actually bidded by Wing Tai. Over here you can see this was actually bidded on June 2024. Here they bidded actually for this 100,000 square feet land at 1325 PSF PPR. And then we fast forward to August 2025, so you can see the time gap is about 1 year, 2 months, 1 year, 3 months. Wing Tai actually sold 88% of River Green on the launch weekend at the average price of 3130 PSF. So of course, on top of this River Green plot, you also have quite a few other plots. So here you have a total of 5 plots. Parcel A, which is River Green, and then you got Parcel C, Parcel B, Zion Road Parcel A, Zion Road Parcel B. So this is Promenade Peak and Zion Grand respectively. So I would say overall in this area, right, in the short term, definitely there's an oversupply. But let's see, right, if this oversupply in the new launch market that actually does affect the resale market over there. So now, right, with all these additional new plots, 3 plots in the River Valley area and also 2 plots in the Zion Road area, let's take a closer look, right, at this resale property in the River Valley area, also known as multi-modern, and if any GLS effect has taken place for this development despite the excess supply in the short term. So first up for the transactions over here for 3 bidders, I'm looking at the 1,000 plus square feet one lah. So August 2025, we have this unit. These are all comparing on Stat 15. This unit is the 27th floor, 1012 square feet, sale price is at 2995 PSF. And then we go back in time to 5th of December 2024, we have an 8th floor unit on the same stack at 2737 PSF. And then last but not least, we go back even further, 16th of November 2023. So this is on the 25th floor on the same stack. So this was sold at 2846 PSF. So using these 2 transactions, I'm going to compare it to the latest one. For the 8th floor transaction in December 2024, this was actually 19 floors lower than the recent transaction, but they bought the unit 9 months earlier. They were able to snag this unit at 258 PSF cheaper lah. But of course, we need to account for the per floor jump, maybe about 10k, 12k range. So I do estimate maybe about 60k profits on paper already in the 9-month period lah. And now for the November 2023 transactions, right? This is 2 floors lower than the most recent transaction in August this year. 21 months earlier, it was bought at 149 PSF cheaper, just based off the PSF cheaper, right, and the size. We are looking at about 150k profits minimally. So this is how I split the GLS effect into 3 parts. The first part will be in 2023, which is the pre-tender announcement. So this was before Wing Tai actually bidded for the River Green plot, but overall we do know that this on the reserve or confirmed sites already, okay? And then next up, we also have the post-tender announcement. This was when River Green was already awarded to Wing Tai, and then we know what is the break-even, what is the launch price estimate. So from there we can kind of formulate if this is still a good buy at this price range, or is the new launch pricing going to be too close to what we expect in the resale over there? And then last but not least, we have the River Green launch announcement. So this one you can see, I think definitely it already has pushed up some of the prices at Martin Modern over there. That's why I call this the third phase, which is the River Green launch announcement. Together, this is also known as the GLS effect. So now, right, when I take a look at the performance for the GLS effect at Martin Modern, definitely I'm not that impressed, because I think last week when I covered for the OCR and the RCR region, right, with a lower capital outlay, we could have seen a much stronger performance, especially in the past 1 to 2 years. I mean, even Sterling had a very strong performance within the past 1 to 2 year period. If you ask me, definitely the short-term supply shocks in the River Valley area definitely impacted the GLS effect for Martin Modern. But that being said, right, it still had quite a sizable amount of profits for Martin Modern. I think that is for people that maybe not so focused on the investment portion, but they also want to enjoy the convenience of the location. But in terms of ROI and how much quantum you actually gain, I definitely think in the OCR and RCR region presented a much stronger opportunity in the past 1 to 2 years in the resale market. Other than using frameworks such as the GLS effect to actually study what a good entry price would have been for the resale property, for example in River Valley area, another tool that my company recently developed, this is also known as the Compass 10 tool. So this will help us compare and shortlist properties fast even in the resale market. So over here, I already done analysis for Martin Modern. At a glance, right, you can already see, like for example, Martin Modern, they are not so strong in the future buyer pool effect, even in the investment quantum effect, the development density effect. But like let's say depreciation resilience effect, it is very strong. So overall, when I look at this, and if you already have seen my previous videos, let's say at Sterling Residences or even Clement Canopy, you can see that the different developments do score a little bit differently for different areas. For example, if you are more worried about like exit strategy, then maybe Martin Modern is not the development for you, because the future buyer pool effect is not going to be as strong as a development, let's say like Clement Canopy or Sterling Residences. So all this, we can compare a few developments in the resale market, and then this will help you identify resale properties at a glance using this visual pie chart. So today, if you are looking around for a CCR property, maybe in the resale market for own stay, you might still want to future-proof yourself in terms of the exit strategy, even though you're still buying for own stay, maybe not for investment. Okay, and for those people that is buying for investment, maybe you want to take a look whether the CCR properties does make sense in the resale or the new launch market. I think in today's market, I do spot some CCR resale that is of good value. For those of you that want to find out more, you can feel free to WhatsApp me at 84849302. Then from there, we can move on to see how we can actually identify what is a suitable property for you. Alright, that's it for today. Thanks for staying all the way to the end of the video. And if you like my video so far and I provided value, do feel free to leave a like and subscribe. And also, if you like this kind of content, you can check out my YouTube channel to take a look at the previous reviews that I've done for the other launches, and also some of the Singapore property markets that I've done. Looking forward to hear from you guys. Bye!